Let's take a look at some charts from the coin that started it all, Bitcoin, from this week's article on Brave New Coin. So for me, these charts serve as an investing tool to make trading decisions. Obviously, this isn't trading advice, but that's why there's so much stuff for so many coins, and especially for Bitcoin, there's so much information. There's so many things you can analyze under the hood. There's a lot of stuff I leave out, but I try to look at as much stuff that's relevant as possible. So let's start with hash rate and difficulty. Bitcoin's a proof of work coin with a 10-minute targeted block time. Now you can see hash rate and difficulty has been all over the place since earlier this year, since having a few weeks ago. We just had a plus 15% difficulty adjustment to the positive side, which brings difficulty back to all-time high levels, essentially. Who knows what's going on with hash rate? There are so many factors that I don't think people realize. I think even people who analyze this stuff, don't realize how much stuff goes into this. Not saying that I'm an omnipotent seer of everything, but we're talking about geographic distribution, rainy season in China, hydro in Canada, hydro geothermal elsewhere, 4 cents or less electricity costs per kilowatt hour for most miners at scale. We're talking about Asics, pre-sales, shipping, unboxing, man hours, housing all this stuff, security for all this stuff. So the bigger you are, obviously, the more overhead you're going to have if you're a mining farm. All of that is going to influence whether or not you are holding all your coins, selling all your coin, hedging some of your coin. Where do you hedge it? Do you hedge it on BitMEX? Do you hedge it on options? Do you hedge it on Bitfinex? There's tons of stuff that goes into this, obviously. It's a massive, massive production. So when you just look at hash rate and you're like, oh, it's going up and down, like there's a lot going on there, obviously. And you look at mining profitability and it's like, oh, the number's going up or down. It's like, well, it's different for everybody. It depends who you are, where you are in the world, if your electricity's free. I mean, there's a million variables here. We can do our best to guess at the variables, but I don't think anybody ever knows the full picture. So although hash rate looks like it's all over the place, there's a lot of stuff that happened. The Bitcoin block reward halving being the biggest event for a miner, I think, out of anything. Price can go up and down, but the halving is a guaranteed reduction in your profitability. So I think what we're seeing here is an adjustment, not only in the setting of a halving, but an adjustment in the setting of all these Asics being released this year. There's 5 Asics that were released this year. So all that's going to have a massive factor in older Asics rotating out of the picture, newer Asics coming online. And I think that's part of what we're seeing here. So this is the block time. You can see block time, it was like 15 minutes plus. Now it was less than 8 minutes. So clearly the fluctuation in hash rates are very evident with the block time. So if we get less hash rate going into an adjustment, you get a slower block time. If you get more hash rate, you get a lower block time, quicker block time. That's going to affect issuance per year, obviously. So inflation goes down when block times are slow. Inflation goes up when block times are fast because you're printing more. Not by much, but it's definitely noticeable on the graph anyway. Again, talking about stepwise disinflationary curve, I guess you could call it. We are here. We just happened to clear the last block reward pretty swimmingly. And when you compare Bitcoin to other coins, this is one of the advantages of Bitcoin, is that we know exactly what's going to happen. We know approximately when it's going to happen. The next halving is in July 2024, something like that. Obviously, that's going to adjust dramatically between then and now, but we can estimate it. Something you can't do with most other coins. Looking at the Asics, like I said, the landscape is 5 new ones this year. Unsurprisingly, they're at the top of the profitability chart. In general, higher efficiency is higher profitability. Obviously, there's a bunch of stuff that goes on underneath that as far as power constraints, hash rate, noise even. I mean, this stuff is insanely noisy at scale. So all that stuff needs to be taken into consideration. But most of the Asics from 18 and 19 and 20 obviously are in profit at this price point, even after the halving, which was a concern for some people pre-halving that there'd be this mining death spiral. We're not seeing that, obviously. This is transactions per day in the line here, transaction values in the fill. Transaction value is kind of uninteresting. In general, they follow price. We're not seeing any ramp up of average transaction values. In general, though, average transaction values are higher post 2017, mainly because of price again. But even when transactions per day are up or down, it's interesting that average transaction values kind of are flat. You'd expect that as transactions per day fall, average transaction values might increase, which is sometimes the case. So lots of variables in that calculation, but in general, not too relevant for price. Looking at transactions per day, it's been pretty volatile. Again, this is related to block times and a few other factors, depending on how the transactions are sent, if they're batched, what types of transactions they are, that sort of thing. So it's unsurprising that the transactions per day are sort of matching the hash rate volatility and the block time volatility. Looking at pending transactions, again, sort of a function of hash rate and block time. You can see leading into halving when block times were 15 minutes plus, we had a ton of unconfirmed transactions. Now we have very little. In general, it's around 20,000 or less on off-peak times. So really nowhere near the 2017, 2018 levels as far as fees getting crazy, pending transactions getting crazy. None of that is really an issue. This is average block size. One thing that I didn't realize that average block size, or max block size, is technically 2 to 4 megabytes now. I thought it was like 2.2 was the theoretical ceiling, but 2 to 4 is the theoretical ceiling, depending on what types of transactions are being sent. This graph just shows over time what the block sizes have been. You can see once we passed SegWit, we started to get most blocks above 1 megabyte. And now most everything is near or above 1.2 even. So most blocks currently are far exceeding anything 2018 or prior as far as block size is concerned. This is fees. Again, always something good to look at. Who's using the network? Why are they using the network? What are they paying? How many people are using the network? All these sort of things are important to look at. You can see fees spiked a little bit leading into halving and all of a sudden boom back down. So there's no crisis, there's no scaling crisis currently. You can see quickly this can spiral out of control if the demand for block space remains constant or increases and block time slows down, or block sizes hit their theoretical limit, their ceiling, that sort of thing. So there's always a scaling concern just brewing, right? Because that can happen really quick. But from a mining perspective, you're better off with higher fees because you get paid more. So especially when block reward is going down, as a miner, I want to see fees extremely high. Obviously not best for the consumer or the user of the chain, but from a mining profitability perspective, that's what you want to see. But nothing too exciting at the moment. This is NVT, inverse metric of economic utility, and monthly active addresses. So you can see monthly active addresses peaked above 900,000 for basically the second time ever in Bitcoin's history. An active address is an address that changes in value from the previous day, up or down, I think, is how they're counted. Either way, this is a measure of activity. A lot of legacy people look at this and use it as a metric for on-chain usage. So up and to the right is what you want to see. And when we surpass transactions per day, all-time highs, or daily active addresses, all-time highs, you're going to get headlines. You're going to get tons of people reading into Bitcoin further. So it's always good to keep pushing these metrics. Not only to just like see what the chain can handle, obviously, not from a stress testing perspective, but a real world perspective. So that's always good. So in a vacuum, extremely bullish. You're seeing NVT sort of creep up, similar to ETH. I mentioned this in the ETH video. Post 2018, NVT is just on this upward trend. And NVT is really historically at the higher third or higher fourth of where it's been. I think if you adjusted for inflation, I should have looked at that version, but if you adjusted for inflation, I think NVT would be lower. So in a vacuum, to see NVT continually rising like this isn't bullish, but I think the NVT metric needs to be retooled slightly or readjusted. Not just because it's bad, it looks bad for Bitcoin here, but just in general, it needs a little more tweaking, I think, to be taken seriously and to become a more useful tool. This is MVRV. It's a measure of market cap versus realized cap, or how many coins have moved on the chain recently. And in general, MVRV above 7 is typically an all-time high or a bubble high. And you can see we're way down here. We're closer to 0 than 7. We're closer to 0 than 5. So to me, I read this as there's plenty of room for upside. And you can see this can just trend and trend and trend. And if you think of this like an oscillator, overbought, oversold, it's pretty obvious how to read that at this point. But it looks good for up. Certainly looks more bullish than bearish. I like that we tested this zone, bounced above it, and it looks like we're good to go. I mean, we can obviously always go back to 0 or below, but historically that hasn't really happened. As far as like, once we're above 2 or 1, we typically don't go back down below it. Obviously this was different, but in general, that's been the trend. If you plop halving on here, there's a halving here, there's a halving somewhere over here, I think. This was post-halving, 2016. So we'll see what happens, but it looks pretty good. This is stock to flow. I don't put much stock in stock to flow, but you can't deny that historically it's followed the predicted price. So this has to do with how much Bitcoin is minted, stock, flow, versus how much exists. And in general, the S2F people get excited when we get this red dot. That's post-halving, I think, right? Because days until next halving are maximum at the red dot. So that is generally the beginning of a trend. And you can see why the S2F model balloons out post-halving. Just one more thing to look at. I don't really go to bed excited about this, but it's there. It's predicting 100,000 or projecting 100,000 within a year and a half, 2 years, something like that. This is the Holo Wave, or the age of coins that have moved recently or not recently. So this is coins that are 5 years old or more that haven't moved in 5 years. It's kind of stagnated at this point, and that's fine. These coins, most of them are probably lost. They're probably, if I had to guess, they're probably just gone forever. Most of them, not all of them. Really how I read this, again, as a trader is, what do the peaks in price correlate to? Peaks in price correlate to peaks in warmer color peaks, which are 1 to 3 month coins, or coins that have moved recently. You can think of this as Bitcoin days destroyed as well, all sort of the same thing. So again, when this peaks, it peaks with price because people are moving coins to an exchange typically to sell. That typically indicates a local top sort of situation. So we're not even close to that now. You can see we're on the way up, but certainly not 15%, 20% of the total. So again, another way to read this is, for me, is just there's plenty of room for upside. I'd start to get nervous if price is extremely high and we're seeing a pop in these newly moved coins. Typically means we topped. Looking at CME Bitcoin futures, this is cash settled. You can see open interest, I think, hit an all-time high May 19th, May 20th, something like that. So open interest is definitely there in and around the halving, continues to be there. Daily volume sort of dropped off a little bit, but it's good to see volume of any kind, GBTC, legacy, global, local Bitcoins, whatever, anything, any interest in Bitcoin from any manner should be seen as a bullish metric. Even these, if these are naked shorts, which they could be because this is cash settled. So from high definition, naked is just, you don't hold the underlying. Even if this is all short interest, I still think that's fine. Like, I don't care. People care about it. People are trading it. This is backed. This is physically settled. They also have a cash settled, which is maybe an equal percentage now in the gray here, gray fill. You can see open interest is definitely back up there. Volume was way up there in mid-May. All-time high for volumes as well for them, both physical and cash. So again, any avenue, any trading volume, especially if it's real trading volume that's regulated, which CME and backed are. And you can see daily volume here is, 32 million versus over 1 billion for CME. So CME definitely is a magnitude greater than backed at this point. And local Bitcoins kind of slid off a little bit. It's around 50 million on any given week worldwide, but overall nothing too exciting. What I'd want to see is just a ramp up of local Bitcoin volume. Like if we're like mega bull bubble territory, like we were, you expect volumes everywhere to just be insane, right? And that's not clearly not the case currently. Same thing with Google Trends. There's not a lot of activity here. Similar to ETH though, since the beginning of the year, this has been rising on a nice trend. So definitely would rather see this go up than down. And this is just zoomed in since August 2018. It's definitely increasing over time. Most of this was halving related, I think, but all in all, it's not sitting at zero. I'm happy with it. In general though, Google Trends follows price. So if price is popping off, Google Trends will probably increase dramatically as well. All right, let's flip to technicals. Bitfinex long shorts, a VPVR, yearly pivots, volume, RSI, and the 50 and the 200 EMA. So longs have actually come off pretty decently here in the past month, 30%, something like that. which is good. I mean, I don't want to see longs at all-time highs. Typically, that is not a bottom signal, it's a top signal. I would much rather see shorts at all-time highs if I'm bullish, similar to here. I mean, clearly these shorts knew what they were doing. But when we drop this far down and shorts are this high, always a good sign. So nothing too crazy here as far as OI is concerned, but I actually like that longs are coming off quite a bit. VPVR, I would read this as support below current price, very little resistance above current price. We really haven't been above 10K all that long ever historically, so there really hasn't been much time for that VPVR to get established. Obviously 13, massive resistance here, local top previously, yearly pivot. Nice notch in VPVR though. Nice support from many directions at 8-1. The 200 EMAs here, the yearly pivots here, the VPVR notch is here. So lots of support if we fall. Obviously this 5200 cross, bullish currently, historically, other than 2020, 2019, mid-2019. These 5200 pivot or EMAs haven't really crossed too often. Historically, it's generally been a long multi-week trend. You know, it predicted the bearishness here, it predicted the bullishness here, and then since then it's just kind of all over the place. But price has sort of been sideways in this range for a year now. Nothing really crazy on RSI. Volume is definitely down since the drop. You expect that. This was one of the highest volume days in a long time for many exchanges, so it's going to be hard to exceed that in the near term, I think. Looking at the daily cloud, everything looks bullish. If we're above the cloud, we're bullish. If the TK cross is bullish, we're bullish. If the cloud is green, we're bullish. A few early weakening signs, early weakness here. The lagging span, which I rarely talk about, is starting to snake inside of price. And that generally says we've been consolidating or sideways. Not like rocket science or anything, but that says the trend is weakening. Be careful. We're starting to droop below the Tenkin here and close below the Tenkin for several days. Also says trend is weakening here. There was a risk of this C-clamp, very similar to here. Another trend weakening signal. And then the big one for me is this possibility of this edge-to-edge trade. So if price drops below the cloud here, there's a high probability it's going to attempt to retrace all the way back to the other edge of the cloud, which is around 7-1. And really that makes sense. If it does happen, it's going to fit this inverted head and shoulders narrative perfectly, because this trade says you expect it to hit 7-1 at a minimum. And this inverted head and shoulders pattern says we haven't put in the right shoulder yet. So that perfectly fits that. It's got a ways to go. We'll see. I'm not betting on it, but if it does happen, you know, this was here to tell you, be careful going long. Lots of weakness here. Another reason for weakness is this legacy correlation. So this is the correlation to SPX, correlation to NASDAQ, which is decently high. You know, over time, it's uncorrelated, right? Since 2015, 2014, uncorrelated. Very recently, it's been extremely correlated. And when you see the volatility index, the VIX, increasing, that's generally bearish for Bitcoin. On the flip side, any spikes in the VIX have been decent buying opportunities over the long term. So I want to see VIX decline, continue to decline. I want to see legacy settle down. I want to see this correlation break sooner rather than later if I've got a bullish lens here for BTC. And then lastly, the quarterly rollover is at the end of the month. And in general, BTC likes to trend pretty strongly through all these quarterlies. Biannual, that's what these are. So in general, these biannual contracts are either up or down. This one's closing slightly up, or looks like it's going to. Definitely an anomaly based on the past 4. Q3's generally been more bearish than bullish for Bitcoin historically. So just something to keep in mind. It wouldn't surprise me if Q3 we drop down to 7-1, satisfy that right shoulder condition, and then in Q4 we break 10K. That wouldn't surprise me. These are the other contracts, not really relevant in the near term. This December 16th to 24th contract, I think that's going to be huge for Q4 expiry. Obviously, there's Christmas and all sorts of holidays in December, but that'll be the contract to watch at the end of the year. You know, if I have to move this line up, we're doing well, right? Like if we break 14 in Q4, this December 16th contract is going to be heavily in the money at that point. Just something to consider as we near these quarterly expiries. So overall, Fundamentals extremely bullish. Technicals are bullish but weakening as far as momentum is concerned. And in the near term, I'd watch for a drop to 7.1. Certainly possible. You know, obviously if we break this local high at 10K, then, you know, we're not going to hit 7.1, right? But as it looks right now, we're kind of teetering here. There's plenty of evidence that we could be weakening for a rollover.